Okay, so you're asking why this mitigation block failed, and I said there are other PDRAs above here which price had reacted from. We have a fair value gap here, and we have this mitigation block. Price had already traded into them. That is, it has mitigated them and pushed
Breaking. Hello.
upwards. Yeah, can you hear me?
Breaking.
Are we together?
Awesome.
I can't hear you. Can you hear me?
I said when we were talking, I could hear only some parts. The network was breaking. Was
Okay,
lagging.
so I said whenever you have a situation like this where you've marked an order block you're expecting price to come into, the first thing you have to look out for are the other PDRAs that are at that zone. Price will react from the most closest PDRA most of the time. So in this case now we had a fair value gap here and a mitigation block, so price just retested that zone and pushed up. So the fact that price had come into these other PDRAs and bought to the upside is a pointer to the fact that price does not really need to come back to this order block. Do you get? Yes.
Yes.
The fact that you are seeing this buy move to the upside means this whole swing point has been mitigated. So what you want to see is a push to the upside to break this old high. But this is what happened there. The moment we failed to break above this old high and instead we broke above this current low, I will consider this move a failed swing. You know what a failed swing is already. When price fails to break above um the the recent high or below the recent low, in this case our most recent high, price failed to break above it but instead came back to break the most recent low. This is a failed swing, so this is actually a break of structure. So for me, upon this retest I would be looking for a sell. Now why would I be looking for a sell? Because price broke, came back to mitigate this came back to this mitigation block, right?
Okay.
As price
Yes.
traded
Yes.
back into this mitigation block, if I see a sell signal, I will take a sell to the downside. So this was a good sell trade for me. But I would love to see this, especially since this is a 30 minutes time frame, right? I would want
Yes.
to see if this place where we had this failed swing was a higher time frame PDRA. Let us assume that this zone is a 4 hours fair value gap or mitigation block. Price traded into a 4 hours fair value gap and we had this scenario. That is when I would really love to take a sell. But if this just happened on the 30 minutes time frame and there is no backing from the higher time frame, I would not really engage in the sell except the higher time frame aligns with what the 30 minutes time frame is doing. Do you get it?
Okay.
Yeah.
Yes. Yes.
So usually I trade AUD USD, not USD AUD.
Okay. Okay.
Yeah. So does that answer your question?
I'm not getting any. Yes. Yes.
Okay. Okay, it's a nice question. I'm really loving our sessions. Okay, so what do we analyze today? We're still doing top down, right? We've done what and what did we do yesterday?
Yes.
Are you
I don't
there?
know why the network. Yes. I don't know why the network is breaking tonight. Oh. Is that
Oh,
switch
can you
off
hear
and
me?
read
Is it okay? It's really breaking up. I can't
Yes.
hear you.
I don't know why, and I'm using for switch off the like.
Hang on, just hang on. All right. So I believe you should hear me properly now. So I said yesterday, what were the things we analyzed? We already did gold, and what again did we analyze?
Um,
You can't remember? Okay, I think it's GBP USD if you cannot remember. I still remember.
GBP, have it?
Yes, GBP USD. Okay, so basically we'll do more practicals. Let's do more top-down analysis and see how the market is looking. So I'm picking a pair that is not really my pair, but this is to show you that this thing works everywhere. So the first thing I would like to do, I'm on the monthly time frame and I'm going to look out for key zones, right? That's what I taught
Yes,
you.
yes,
So this is a
Yeah.
key zone here, which I'm very much interested in. So I'll have that key zone marked out. It's a very long one since 2007, but why I'm marking it out is because you can see that price had been reacting from that zone multiple times. The last time it reacted was in 2022 November, and since then USDCHF has been dropping. I still remember this time very well. I made a silly mistake on USDCHF, and I was looking for, I took a sell, but I closed my sell very early on USDCHF. I was not looking for a buy, but after taking a couple of losses I adjusted. But as at then USDCHF started ranging somewhere here. There was one crazy range, and that range really stayed a long time. But I remember that I made quite some dollars from USDCHF as at that time. So
Okay.
yeah, so that's the resistance zone. Price reacted from there. So now I'm going to focus
Are
on
you
the
want
most.
wait, are you listening to another audio? Because it seems from
Oh,
our
okay, you
end
can
too.
hear my other audio, Abby. Okay,
One loud.
okay. Is it loud?
Loud.
Is it okay
Yeah, you
now?
can even hear what they are saying.
Oh, really? Hang on.
Yes, yes.
All right. Can you hear me now?
Yes, yes.
Okay. So I'll mark this level here. So why am I marking that zone? Because that's my most recent structures. That's the most recent point where price reacted from. So that's why I'm marking it up. We had this previous reaction in 2021, and currently price came back to that zone. But if you notice, there is something that happened here. Price swept this old low, right?
Yes, yes.
Then traded above it. So that's sweeping that old low on this time frame. What is it? It's actually a liquidity grab, right? So price went to take
Yes.
liquidity from that old low. But we can't say market is bullish yet because market has not broken old highs. In fact, in this case, we can see this is the old high. Price has not traded above it. But so basically on this monthly time frame, what I'm really focused on is just the key zones, and I've been able to spot out some key zones here. Where's the next key zone I think price can react from? I can mark here. Why am I not marking the tip of the wicks, you may ask? Is because if for any reason price wants to drop, the first point is going to react from is from the level where this body is. So our first reaction
Yes.
can be here, then maybe to the wick. Do you get it?
Yes.
Oops. Yeah, so now that we've marked key zones and possible places where price can react on, see, we can even drag this to the back. Oh.
Okay.
Can you see that it was also a support there? Support is now acting as a support again. So price has currently traded back into it. So I've just succeeded in marking my key zones, and I'm done from the monthly time frame. So I slide down to the weekly time frame. On the weekly time frame, I'll look out for structure alongside key zones, and I can see that this market is clearly what, bearish, right or wrong. Are you with me? Can you hear me?
Hello, I think we broke again. I said,
Yeah,
I said,
this is
the last thing
go.
that the last one I heard was the zone, the support zone.
Yeah, I said this. And then I've come back to the weekly time frame. I moved my chart to the weekly time frame, and here on this
Okay,
weekly time
okay.
frame, I can see that the market is clearly bearish. Why do I know it's bearish? Because it's printing lower lows and lower highs, right? How did I come to
Yes,
that
yes,
conclusion? Because we broke below this low. Remember that previously market was in an uptrend, printing higher highs and higher lows. Then we closed below this low, and since then automatically it becomes a what? A lower high, right?
all right.
LH,
Yes.
and continues in that order. So now for market to shift back into an uptrend, in as much as we are in a support zone, we want to see this high traded above, right?
Yes, yes, yes.
Yes, so currently price has not really done a good job in closing above it. Let us see. You can see it has not really done a good job. It's just a wick above it. So I would take this as a liquidity grab. Price just swept liquidity above that old high. If really price wants to break above that zone, I want to see a candlestick close above that high. Do you get? So for me, this
Okay.
candlestick above it is a liquidity grab, and it seems the sell continuation continues. So for now, I'm going to be focused on looking for sell opportunities on USDCHF. The only issue is that price has now traded back into an old support zone. So I'm going to trade with caution from this current support zone. So all I've done on the weekly time frame is to just know the current market structure, because I don't think there's really any. Okay, we can mark this level if you want to. This is also a key zone. How do we know? This was a support turned to resistance. Price has come back to it again and is acting as a resistance, right?
Yes. Yes.
Yeah, so the next level market is supposed to react on if for any reason price breaks out of this point where it is. If price can successfully break out of this point where it is, the next place I'll be expecting reaction is here. Do you get it?
Yes. Yes.
Yeah. Now if you notice, whenever I'm marking these zones on the higher time frame, I'm not putting it on the wick. I'm putting it at the body. I seen it.
Okay.
Yeah, because that's the place price would most likely react from before taking out the wick. So those are good places to put as your targets.
Okay.
Yeah. So I'm done with the weekly time frame. I can now slide down to the weekly time frame to see the structure. So you are seeing how those zones that I'm marking from the higher time frames are now making sense the more I slide, right? So because I've
Yes.
already marked this one, I know what this one is. What is it? That's our weekly key zone. You can also tag it in case you think you will forget. Weekly key zone. See, it is in the middle there. We can put this on 14. Can you see it? So whenever I look at that zone, I know what it is. So since my weekly market is bearish, you can also write if you think you're going to forget to. For me, this is what I do. I can put this and see. Okay, I'm using the wrong tool. It's the wrong tool. No, let me just use text. I can just write weekly TF is bearish. Then I can say price. No, that's enough for now. So I can just write that and just keep. So it gives me an idea of what is happening in the market, that the weekly is bearish. So I'll be focused on looking for sell opportunities, right? Because the weekly is
Yes.
bearish, and look at the daily as well is bearish. How do I know the daily is bearish? We had this structure that formed here. If you look closely at this point where the structure was formed, I can see something very beautiful here. Previously it was bearish, right? But at this point,
Yes.
let me show you how to look at structures very carefully now. You can see that market pushed down, then we had this one bullish candle that pushed to the upside. Can you see that one bullish candle?
Yes. Yes. Okay. I've seen it.
Yes.
I've seen it.
Yes. So the moment market retraced back, that is a new high that has been created. So automatically this is a higher high and this was supposed to be a higher low. Do you get it?
Okay. Yes.
It looks tiny, but it is a structure. It will be clearer on the 4 hours time frame. So the moment price traded above this blue candle here, it means on the 4 hours time frame there have been a break of structure. And this can even apply to the daily time frame as well. And look, somewhere here, what do we have? A fair value gap. Price traded back and boom, broke structure again. And what do I tell you about if market breaks structure 2 times? It has confirmed the particular trend, right? So this is the
Yes.
second break
Yes.
of structure. This is going to be clearer on the 4 hours time frame, but I don't want to go there yet. And since then, we've been printing what? Higher highs and higher lows. So this market automatically became bullish. It became bullish starting from the 4 hours time frame. And even if you want to really gain clarity, if you had waited for it to break above this high here, this market is still bullish. If that's the high you want to consider as your daily time frame high, the moment we broke above it, automatically the market became bullish. Now, did we keep printing series of higher highs and higher lows? Yes. Not really. We had this push to the downside. Yes, we created a new high. So this is a new higher high and this is the higher low. So if this uptrend was going to continue, you don't want to see price trade below this zone, right? Why? Because
Yes.
that is our new higher low. But remember that the weekly time frame is bearish. So what all of this was a retracement. Where was price retracing to? It was retracing back to that weekly key zone that we had marked out. Do you get it?
Yes.
So the moment price traded into this weekly key zone, I would only be looking for sell opportunity, and that will only be confirmed if we break above this current low. So I will just be marking out the lows and be waiting for a reaction from those zones. So the moment we broke below this zone, it has signified to me that yes, the sell trend is about to continue.
Okay.
Is it making sense?
Yes. Yes.
So you can now on this time frame mark this zone and be waiting for price to come and retest it. What do you have here? Boom, and came to retest it, and since then market has been selling. Even if you don't want to mark that zone, you see this last bullish candle here. This is an order block. This is a daily time frame order block. So you want to see that order block hold, which it held. Price traded a little bit above it before continuing, but it's not that bad. But usually me, I would love to take this whole mitigation block instead. This would be my focus. I would focus on the mitigation block and look at how price traded into it. Boom, and a sell. So the moment we broke above this daily low, it has really confirmed that our sell is about to continue again. So I would be selling back. Remember that this is a monthly key zone here, right? This one at the
Yes.
bottom here. So I will be selling back to that monthly key zone, not below it. But how am I going to do that? I will have to go back. The moment price came back to, let's circle some things. The moment price traded back to this zone, right? In fact, from this first touch here, from this first one, I would have gone down to my 1 hour time frame to go and start looking for a break and a retest. So let us come here, and we had the perfect one here. We broke. Let's take this off now. So we broke above this 1 hour low. Remember, we are looking for bearish moves. In this case, the market has not really retested that zone, but it's fine. We broke below that zone and we came back into this fair value gap here. That's what market reacted from, and we had the sell to the downside. Do you get it? We had a sell.
Mm.
What time is it? Is it 16:15? Okay, I think I could still take this trade. Yes, 15 is 3 o'clock. Yes, 3 p.m. I could still take this sell. Yeah, I could still take this sell. We had a nice sell to the downside. You may ask, why didn't market come back to this zone? Yeah, it could have come there, but it decided to react from this FVG. That's why I've taught you different PDRAs so that you could just mark them up. Whichever price reacts from, that's where you trade. Do you get? So you can. Are you with me?
Hello.
Yeah, are you with me?
Please let me reconnect. I don't know. I didn't even know. Like a call came in.
Yeah, I can hear you. I can hear you. You are
Okay.
connected. Yeah.
Uh-huh. Thank God.
Yeah. So where did you stop?
I said you talked about PG arrange that's why you
Okay.
are
Yeah.
marking.
Yeah. So I said you focus on the PDRE where price reacted from. In this case, this is the PDRE it reacted from, and boom. That's why you always trade what you see, not what you expect. So where's the next place price? This was under new break of structure. So at this point, I will just be focused on looking for sell opportunities. So I'll mark this order block here. That's where price reacted from the next day. It took a long time, sha, but price reacted. We had another break of structure. Boom. What would I be focused on? First of all, as usual, I'll first mark my mitigation block. Price reacted the next day and we now had a massive drop finally. Then do we still have under trade? This is another one here. I'm marking this zone under mitigation block. Price traded into it. Boom, to the downside. So we had one, two, three sell, four sell trades in a span of 1, 2, 3, 4, 5, 6 days. There were four trades. In the span of 6 days, there were four trades to be taken. But how did we come to this conclusion? Because we had done the analysis from the higher time frame. So we just moved down to the lower time frame and started looking for sell opportunities. Remember that this is not our entry time frame still, right? But this is the
Okay.
time frame where we're going to really follow the sell direction. We'll just be waiting for the break and retest on the 1 hour time frame and be looking for trade opportunities from the 1 hour time frame. But before we could come to this conclusion, this is nested in what the higher time frame is doing, right? So we made sure price was in the higher time frame PDRE, then we come to the 1 hour time frame, and on a daily basis you are just trading the break and the retest. Is it clear?
Yes.
Yeah, so the moment price broke above this 1 hour high, our bias changed again. We started having new break and retest to the upside. You could look for some buy opportunities for that time period. Then for this second time, it retested that key zone. What are we seeing? Okay, so we had a new break of structure. Remember that when you come back into your higher time frame PDRE, you want to see price break in the direction that you are expecting. Don't just take the trade because price has traded into the higher time frame PDRE. Is there a break of structure on the 1 hour time frame? That's what's going to let you know that the market is now ready to move. Is it clear?
Yes.
Okay. So in this case, I'll mark up this mitigation block again. Boom! Price came back to react to that zone. Remember that this is the whole mitigation block if we'll be fair. But usually I just like to fine tune it to the week. You understand what I mean? Yeah. Price came back into it and we had this massive sell, massive drop to the downside. Do we have under trade? Market started ranging for a week plus. All of this is not a very nice trade. So I think price here traded into a 4 hours time frame PDRA. I'm sure we have a 4 hours time frame PDRA there because at this point the 1 hour structure has been broken here. So that's why you need to be looking at 4 hours too from time to time. So this whole move was into a 4 hours PDRE. Then nothing really cute for me here, to be honest. Nothing. This was 14th, right? Yes, nothing really cute. Market was just ranging, then finally broke down heavily. This was that CPI news, I think. I think this was CPI. So in the past few weeks, nothing really beautiful on USD card to trade. Yes, there were some trades, but just few good trades. Do you get? Then we are back to this zone. What zone is this? This one at the bottom. Do you still remember that zone?
I'm coming. I'm trying to zoom in. The one at the bottom.
Yes.
Mm, looks like
That's the monthly time frame key
again.
zone that we marked. See it? Is this monthly time frame key zone that we marked? You can use different colors if you think it's gonna get you confused. You can use different colors. So you know that red color is for your weekly time frame, but usually me I just like to tag them. But basically from
Okay.
experience I don't even need to tag again. So I just put monthly key zone. Abi, then I can put it at the right because I want it close so that I can always see it. Yeah, she's nice. So when I go back to the 1 hour time frame, now that price has traded into it, I know exactly where market is. Oops, I can't see it. Why can't I see it? Okay, still why. Yeah, I think this is nice. So you see, I know exactly where that point is. Nobody needs to tell me what it is. I know it is my monthly key zone. I think I want to put this thing in the center. Yeah, I think I prefer it. I don't even know where the center is. So, but me, I shall know where it is. Find a way of labeling it in a way that you would understand. There's no rule to this. It's based on your understanding. Okay. Do you get? Are we together? Are you with me?
Yes, yes.
Okay. So now Now that price has come back to this monthly key zone, we don't have a business trading on USDCHF for now because this whole market is even ranging. There's nothing tradable here. This is a range. So I want to see some nice break of structures before I would look to take a trade on USDCHF. So that's USDCHF in a nutshell. Do you have any questions?
No, I still processing
You are processing. Okay, that's okay. That's okay. So has this sessions been helpful? I would just like to hear from you. This
Yes,
current session we just started breaking down the chart.
yes, yes. Yeah, I'm getting it more.
Okay, it's making more
Getting it.
sense. Yeah.
Yes, yes.
So the goal is to just every day we look at the chart, we analyze. I just want you to get the whole idea of how I analyze the chart, so that because that's what you'll be doing basically. This is how you hunt for a trade. This is how you look for trades. This is how you know where to mark and what you should be expecting from a particular zone whenever price comes into it. So like I said, this is what we're going to be doing again and again and again and again until before we when I see that we're good at this, then we'll now go into entry models. Is that clear?
Yes, yes.
All right. So I think that's it for today.